Hello, I am Rakesh Kumar Sharma. Today I am going to present my paper titled Comparison of Stock Price Prediction Models Using News Articles, Currency Exchange Rates and Global Indicator Performance. Let's begin with introduction and background. Stock price is the current price of a single stock on which that particular stock is being traded in the market. In other words, stock price is the highest price at which it can be sold for, or it is the lowest price at which it can be bought for. Stock price is dependent upon the various factors. These factors are changes in the industries, ongoing performance of the company, major political events, inflation, market behavior, and company related news. Due to this volatile nature, stock price trend prediction is a problem that still needs to be tamed. The correct prediction of the stock price trend will help investor to invest in a stock that will earn profit to the investor and also let investor to know when to sell a stock to minimize the loss. Historically, stock price were predicted using fundamental analysis and technical analysis. In fundamental analysis, stock price is predicted by analyzing the financial records, economic records, company assets, market share, and by running the fundamental analysis on company's financial statements. Fundamental analysis is more suited for long-term stock price trend prediction. In technical analysis focuses on the study of past market trend to predict the future price movement. It is best suited for short-term stock price trend prediction. Existing studies uses time series data, news articles, technical indicators independently and their combination for stock price predictions. Motivation for this research is that foreign market can also drive the stock price. The world is far more connected now than it has ever been. We are buying and selling the things in any part of the world just by click of the mouse. In this hyper-connected world, there are hyper-dependency within the countries. A country is importing one good from one country and exporting some other good to other country. Thus, each country impacts the economy of other country. The economy that have larger trade network, financial relationship with more countries also have the larger influence on other countries. So, our proposal is to use global indices performance for a particular sector and USD INR ratio along with time series data, news articles, technical indicators to predict the stock price trends more accurately. Now let's look at the methodology used for this research. The proposed methodology is to predict and compare the stock price trend of different models using historical stock price, news article, technical indicator, global indices performance and currency exchange rates. Various classification algorithms like logistic regression, random forest, ADA boost, gradient boost, XG boost and LSTM model with different time steps are compared. Global indices, stock time series and currency exchange rate data collected from investor.com and for news article data has been collected from kaggle.com. In this research, following global indices are used. Global indices are NYSE, Nasdaq, Hang Seng, Nifty, FTSE, SP 500, Kospi and Dow Jones. In order to make data suitable for machine learning, following pre-processing technique has been used. All the data inconsistencies are removed. For example, in volume column, K, M, B are imputed with 1000, million and billion respectively and the special character like comma is removed in order to convert those values into the numeric format. Mean imputation is performed for the columns which are having less than 25% of missing data. Globe world embedding are used for the news data pre-processing. After pre-processing, 300 new columns are created. At the end, global indices data, news article data, stock price and exchange rates has been intersected. In this research, stock price trends are predicted and compared using logistic regression, random forest, gradient boost, ADA boost, XG boost and LSTM model with different time steps. Output from the model is classified as 1 if the stock price will increase or 0 if the stock price will decrease. Accuracy, recall and true negative rate are used for evaluating the performance of different machine learning models and the language used for this research is Python. Now let's look at the results. While working on this research, two different strategies for stock price trend predictions are identified. These strategies are strategy 1 and strategy 2. Strategy 1 is an ensemble of 3 different LSTM models. LSTM model 1 with 20 time steps and 0.5 dropout, LSTM model 2 with 60 time steps and 0.1 dropout, and LSTM model 3 with 67 time step and 0.5 dropout. For newly onboarded stock, mapping of a stock to a model has to be identified in strategy 1. So, new stock onboarding is very time consuming in strategy 1. Since strategy 2 is based on single LSTM network, hence it is more generalized. The accuracy observed from these strategies are as follows. Strategy 1 gives 60% of the accuracy for most of the stocks except Sonata, and strategy 2 gives 58.4% of accuracy for most of the stock except Sonata and Emphasis. What makes both of these strategies more accurate and stable is that recall and true negative rate with both strategies are equal, means they are equally good in predicting the increasing and decreasing trends. In comparison with existing results, it is found that the proposed model is performing well in comparison with existing research. In one of the research, researcher Lee got 67% of the accuracy with extracted event data from the news. But extracting event for a stock from a news is not a daily affair. The proposed model in this research is getting 60% of the accuracy with unseen stock data with strategy 1 and 58% of the accuracy with unseen stock data with strategy 2. Now let's look at the conclusion part. Strategy 1 gives 60% of the accuracy and strategy 2 gives 58.4% of accuracy. Both strategies are tested upon 12 randomly selected IT stocks. These IT stocks are SCL, Infosys, Tech Mahindra, Wipro, Birlasoft, NIIT, Emphasis, Mindtree, Persistent, Zensar, Hexaware and Sonata. Both strategies are predicting increasing and decreasing trends equally well and they are quite stable. So, the recommendation is when extra stretch in the accuracy is required, then strategy 1 is best suited. Otherwise, strategy 2 can be used as a generalized strategy. Now, let's look at the future works. In this research, only the stock price trends are predicted. So, as a future work, magnitude of the change or exact change in the price of the stock can also be found out by using the proposed approach. Since this work is to predict the stock price trend for the next day, so as a future work, weekly, bi-weekly or monthly prediction can also be made by using the proposed approach. Thanks for your patience.